Forex trading can be an expensive endeavor, and I would love that you don't spend any more money than you absolutely have to. You might have spent money on a trading system or some courses or whatever the case is. From here on in, though, I don't want you to spend or lose any more than you absolutely need to. Hi there, my name is Russ Horn, and these are the steps to trading live. Too many traders open up a live trading account only to lose everything that they've put into it. So what I've done is developed a process or a series of steps, kind of a 1, 2, 3 approach to opening a demo, opening a live account, trading live, and losing as little as possible in the process. So let's take a look at the different steps. Step number 1 would be to trade a demo account. Now, there's a few different reasons you'd want to do this. The first thing is to learn the platform. Now, a lot of you already know the platform that you're using, but some traders don't, especially if you've got a system that uses indicators specific to MetaTrader, for example. You want to learn the platform and how it works. How do you get into a trade? How do you get out of a trade? With the MetaTrader charts, sometimes it's not so easy to get out of a trade or close a part of a trade as you might think. And if you don't know how to do it, the last thing you want to do is learn that you don't know how to do that in a live trade that's going bad. So you want to learn the platform, the ins and outs, and how to use it properly. Next thing is to learn the system itself. Reading the system in a manual, just looking at it through back testing, this isn't quite enough. You want to actually place some trades using the demo account just to see that you know for sure how the system works. Now, does the system work? Do you like the system? All of these different things are something that you want to find out on a demo account and not on a live account. And finally, you want to learn yourself. Are you able to follow the rules? Are you doing the things you're supposed to be doing while you're trading this particular system? A lot of traders don't honor their stop losses. They move or remove their stop losses. These are things that you shouldn't be doing. Jumping the gun, taking trades too early, getting out of trades too early. These are all things that you want to get out of your system and learn about yourself on a demo account and not in a real money market where you could potentially lose everything that you've put into your account. Step number 2 is to now open a small live account. Now, once you've got the demo account figured out, you know the system, you know how it works, you know the ins and outs, you know that you can actually trade the system. The next step is to open a small live account. And with this one, I suggest opening the smallest account that your broker will allow. A lot of the time, a broker will allow something like a $250 deposit. Some offer even less. I wouldn't go any lower than $100. There are some that offer a $1 account, but what are you going to do with that? So go around, between $100 and $250 and start trading live with the smallest account that you can open. This ensures that if you do blow the account, that it's going to be something that you can easily replace. And you're going to find out very, very quickly that trading live, even on a small account, is not the same as trading on a demo. The charts are the same, the signals are the same, the indicators are the same. Everything as far as the system goes is the same, but you are not going to be the same. Your psyche is going to play tricks on you. So once you are used to trading this very little account, then you can go from there. So the next step would be to add 1/3 of your funds to a live account. Now, if you have, let's say, $3,000 to add into a trading account, I would not put more than 1/3 of that or $1,000 into the actual account. It is known or common that most traders blow their first couple of accounts. They will bankrupt their trading accounts. And the last thing I want you to do is put everything you have into a trading account only to see it go away. So never add all of the money that you have for your trading account into this trading account. If you are going to blow it, then you have some backup resources. You can fund it again and then maybe a third time if you absolutely need to. But having those backup reserves, those 2/3 of the actual money you have available to fund a live account, is going to be more important than you might realize. Now, I hope this is never going to be the case for you, but for most traders, it is. Now, step number 4 would be to trade one micro lot. Once you've got an account that is a fair size, 1/3 of the available funds in your account, start off by trading the smallest trade size possible. This is one micro lot. It is going to be generally worth about 10 cents a pip. And if you've got an account that's $1,000, you might think, what the heck is that all about? This is to get you acclimatized to trading live when your account is a certain size. Now, you don't need to do this step for very long, but trade one microlot positions for 3, 4, 5 trades until you are comfortable. All of this is to acclimatize you to trading live. So the reasons behind all of this is to acclimatize you to the process of going live and with the adequate trade sizes. And if you do this through the baby steps, little things, little increments, one at a time, slowly getting bigger and bigger, you are less likely to overtrade, take careless trades, do things that would lose you money in the markets. Now, the final thing, number 5, is to increase the position size. Once you've traded one micro lot and you are comfortable with this, maybe increase it to 0.5% of your account per trade, and then trade that for a couple of times, and then go 1% of your account per trade. And then once you're comfortable with that, go to maybe the full 2% per trade. So you're going to risk 2% of your account on each trade you take. Now, that would be the industry standard. You may have a different standard for yourself. You may not want to go more than 1% risk of your account per trade. Or maybe you would like to go a little higher, 3, 4, 5 even. But whatever the case is, get there incrementally. I don't want you to just jump in it and get caught doing something that you're not quite sure about doing, something that maybe is breaking the rules. Whatever the case is, this is all here to help you get on the right track, learn about you, learn about the system, what you can and can't do. And by the time you're trading the full amount, you know how to get in and out of the trades. You know what are good signals from the system, what are bad signals. You know that you are able to honor your stop loss and so on. So by the time you've added the funds to your account and you are trading the full percent risk per trade, you know that everything is sorted out, taken care of, and you are on the right track.